Hey, this is Bubble Analytics, and this week's attempt to smash the financial patriarchy comes with a strategy that involves RSI and two exponential moving averages. We're going to be using EMA-10 and EMA-30 to define our trend, and then we're going to be using 8-period RSI to tell us when to enter and exit the market. So for our trend filters, a bullish trend would be defined as EMA-10 trading above EMA-30, and bearish trend would be EMA-10 trading below EMA-30. And then rather than looking for oversold and overbought areas to trigger longs and shorts, instead we're going to be focusing on the 50 and 70 levels for RSI. So for a sell signal, EMA-10 must be below EMA-30, and we're looking for RSI 8 to cross below 50. And for a long position, we're looking for EMA-10 above EMA-30 and RSI 8 to cross above 50. And then we're going to add a secondary long position whenever RSI crosses above the 70 position. So if you are ready to start coding that up, we will begin. But first, please read the disclaimer. Okay, let's code this up then, and to begin I've opened up a fresh Jupyter notebook, renamed it RSI EMA, and I'm just going to create a few empty spaces, a few cells, by hitting shift return there. Also open, we have our template. We use this template all the time to create strategies and then backtest them. Both the completed codebook plus the template will be available to download for free via our website, www.bubble-analytics.com. It's in our GitHub profile, link is on the footer there. So let's get going. First step then, as always, is to import our libraries. So I'm just going to copy that across there, paste in there and initialize it by hitting shift return. We are then going to download some price data. So I'm just going to grab that in there, and the output is this. And if I just comment these out here, the important line is here. So we are using the Y Finance library, which we imported as YF, and then we're using the download method to take 10 years worth of daily time frame data for QQQ and store it in a data frame called DF. In raw format, that's how it would look. All these lines do is tidy up the data frame a little bit, make it look a little bit more readable. So I'm just going to uncomment them, hit return again, and this is the result. So for this one, it is an RSI and EMA strategy. So let's do the EMAs first. So I'm going to create EMA-10 and EMA-30. So with an exponential moving average, we're going to give it the closing price. So we're going to say create a column called EMA-10 in DF, and then populate it with the values of the close.EWM, which is exponential moving average, and then give it a span equal to whatever look-back period you're looking for. And then so last 10 values, and then calculate the mean. And if I run that now, you'll see we've got values here for EMA-10. So I'm just going to copy that, and then we're going to create the same thing but for EMA-30. So there's our two moving averages, two new columns in there. And so next we are going to create our RSI indicator. And to do that, I've come into stock charts. Stock charts is great, their chart's cool. There's lots of indicators here to have a look at. It tells you who made them, what they should look like, and how to calculate them here. So RSI basically takes the difference in the closing price, so difference between today's price and yesterday's price, effectively. That's how we start. So I'm going to define a function called RSI, which is going to take data. So we're going to tell it where to find our close prices, and then N is representative of whatever look-back period you're looking for. So Typically the default's 14, isn't it? But in our case, we're going to be creating an 8-period RSI today, so N was going to be 8. So we're looking for our price change there. So I'm going to call that PC, and that is equal to df.close, and then we're going to use the diff method, and all that's going to do is take the difference in this closing price versus that one. And then from those diffs, in fact, I'll tell you what, let me do it just for, there we go. So just so that you don't think close is a method there, but so we're going to take the value of our closing column there and then calculate the difference on a bar-to-bar basis. So once we have those differences calculated, we're going to separate out the positive differences versus the negative differences. Positives we're going to store in up and negative in down. For the up, we're going to take in that price change we just created here, and then we're going to use the clip function or the clip method, setting our lower bound at 0. So effectively what it's saying is if the value is 0 or lower, record it as 0. Or if it's above 0, record that value. So if it was plus 1.2, that's the value that would be recorded, 1.2. And if it was negative 0.1, it would just record it as 0. And then we're going to do the same thing, but for the negative values. So I'm just going to copy that in, and instead we're going to set the upper bound as 0. Basically what that says is anything at 0 or above, record as 0, and everything under 0, record that value. And then because we don't want a negative value within our data set, we're going to use the absolute method to convert that, just take away the minus sign effectively. So with our up and down values stored separately, we're going to take the averages now. So we want our average up and our average down. And for average up, we're going to use an exponential moving average, but rather than using span, we're going to be using the Wilder's method to do it. So effectively, I'm going to take all the values in up and then use the EWM method for an exponential moving average. And then Wilder's smoothing is alpha is equal to 1 divided by your look back period. And then when we say adjust equals false, all we mean is don't use a standard exponential moving average weightings really for this one. And then so with our look back period values collected, we then calculate the mean. So effectively we're using Wilder rather than span equals 10, we're using Wilder's, but effectively it's the same thing. We're taking whatever our look back period is. In our case it's going to be 8 today, so we're taking the last 8 values, calculating the average. Same thing for the down column, but obviously we're going to change that to DN. So we're going to take exactly the same thing, and then relative strength is equal to average up divided by average down. And then RSI is equal to, I'll need to go and check this. So it is 100 minus 100 divided by 1 plus the relative strength. All right. So 100 minus 100 divided by 1 plus relative strength. Yeah. And then from that we're going to return RSI. So to create a new column with RSI 8, we are just going to call that and call our function RSI, tell it where to find the closing prices, DF, and then our look back period is 8. And again, if I just run that now, what we should find is we have EMA 10, EMA 30, and RSI 8 in our data frame. I'm going to get rid of that noun value here. Okay, so all that's happening there is we're dropping any not a number value, NA value, and doing it within the existing data frame. So there we go. So now we have values for each, and our data is ready to go. So now we're just going to create our chart. So to do that, I'm going to come back into the template, and because we are creating price with an indicator below, it's going to look a bit like this. So price above, indicator below. So effectively I have one column. So this is one column, and with 2 rows. And row 1 is going to be our price data, row 2 is going to be our RSI data. So if we go back in our template, so price chart with indicator below, we're going to take this whole section here, and plus I'm going to take the slice as well. So grab that, and I'll leave a little bit of space for our signal generation in a second. But so we've got, there we go. So in this, basically we're making subplots. So we're creating 2 rows within 1 column, sharing the axis, and then price is going to take up 68% of it, and the indicator below 32% of it. And this part here is just basically bringing in our OHLC data for our candlesticks. So next step then is to, let's have a look. So we're going to overlay our moving averages onto our price. So that is straightforward. We need 2 of these, and one of them is an EMA-10, which we will make white, and I'll just call that EMA-10. And then the next one is EMA-30, and we'll make that gold. And again, I'll just call that, give that its label name. So I'll just create a bit of space so we can see everything. Okay, so that's price then with our moving averages overlaid. Let's do RSI next. So RSI then is, we're adding some indicator data to our subplot. So just need one of these for our RSI data. And that is pulling in data from the RSI 8 column here. So tell it where to find it, and then we're going to make that red, and we're going to give it a width of 2, and that is RSI 8. Okay, and then to get it going, we are going to take all of this section at the bottom here, including that H line, because I'll show you in a minute why we'll need that. So we're going to pull that in, and then we are going to set the index, set the date column as an index, and that way we can display date time on the x-axis. So let's just muck around with this then. So I'm not going to save the chart image, so I don't need that. It's a daily chart, so I don't need to get rid of the hours between market being open. And the only thing I do need to get rid of using range breaks here is to get rid of Saturday and Sunday. So effectively I'm removing all data that comes from Saturday up until Monday. And then let's get rid of these titles and this. And then because RSI, when you have a look at it here, seems to have lines at 70, 50 and 30, we're going to recreate that. So to do that, we're adding a H line, a horizontal line. So we're going to need 3 of those. And so 70, 50 and 30. And then if I run that, fingers crossed. Lovely. Okay, so there we go. Seem to have RSI there. Oh yeah, we're starting from 0. Okay, so I'm going to muck around. So we've got 2,513 rows. Let's display the last 350-ish. So we'll call that 2175, and then show that. I'll tell you what, actually, let's zoom in a bit. Let's do the last 200 bars, and then we'll take that going from, what's that, 2300, and I'll call it like that. Okay, so there we go. That's a little bit better, isn't it? So we can see a little bit. So we've got our RSI below in red, price data above. And for our strategy then, we're going to be using our exponential moving averages to define our trend, and the RSI values to give us our entry and exits. So effectively, when white, which is EMA-10, the fast moving average is above gold, we will define that as bullish, and we'll be looking for long positions and vice versa. So, and in fact, I will zoom out a little bit, because we didn't really have a lot of good examples there, did we? So, okay, There we go, that's a bit better. I know we're a bit sort of squashed here with price, but it's easier because we're going to need to have a look at RSI in a bit. So let's have a look. So bearish trend then, white below gold, and then we would be looking for entries using the RSI. And bearing in mind that in a bearish trend, RSI tends to be oversold a lot and never really reaches an overbought position. We're going to define our entries as RSI moving back above 50 and then back below. And then for a bullish position, it's similar. So with our moving averages in bullish position, RSI never really hits an oversold position. Lowest in, let's have a look. So how long is that? April the 8th, 2025. And then it didn't get oversold again till November. So everybody looking at this thinking RSI is what you buy when it's below here and you sell when it's above here is wrong, right? So so what we're going to be doing instead then with the trend in bullish position, we're going to look for RSI to move above 50, and then I think probably for a kicker, anytime that RSI, bearing in mind that RSI tends to get overbought only when you're in bullish position, anytime we go above 70, I think that's going to be another trigger to buy. So we're going to have two triggers to buy, and one that gets us out of the market when we get a sell signal. Not so sure that we're going to actually short on that one. RSI and moving averages are not brilliant for that. So right, let's start coding this up then. So I will grab this section here, which is our signal function, and pop that in there. And I'll also grab this, which is how we display our entries on the chart, and pop that in there. So all we're doing with this function here is taking in data and creating a signal variable which is the same length as our data frame and is pre-populated with zeros. And then we're running a loop that says for I in range, so I is any individual place in the data frame. So for I in the range, the length of df, so run the loop for the full length of the data frame. And then where we hit our sort of buy parameters, we're going to put a 1 in our signal column. Where we hit our sell parameters, we're going to put a 2, and if we don't have a signal, we'll just put a 0. So let's start with that then. So the first parameter is data dot for a bullish position. So EMA 10 has got to be above EMA 30. So where the current bar is I, yesterday's bar is I minus 1. 2 days ago, it would be I minus 2. That kind of thing. So as long as today's EMA 10 is above today's EMA 30, we're in bullish position. So that's the first one. Oh, there we go. Okay, that's our first parameter, and let's just copy this. So what we're looking then, so while we're in bullish position, what we're looking for is RSI to be below 50 and then back above. So if yesterday's RSI value is less than 50, today's RSI value is greater than 50, that's what we're looking for. So I'm just going to copy that across, and we're just going to amend it. So RSI 8, so yesterday's RSI 8, I minus 1, is less than 50, and we'll just get rid of all this bit, and there we go. And today's RSI 8 is greater than 50. That is our buy signal met. So if that makes sense. So basically with our bullish averages, our moving averages in bullish position, if yesterday's RSI was under 50 and today's RSI is above 50, that's a buy signal. And for our sell signal, we're going to have exactly the same thing. So what did I do there? There you go. Right, so for a sell signal, EMA 10 should be under EMA 30, and RSI should be above 50 yesterday and below 50 today, and that's what gives us a sell signal. So for a buy, we're going to put a 1 in our signal column. For a sell, we're going to put a 2 in our signal column. But we're going to also have a third buy signal, which is going to be when RSI gets overbought. So I'm just going to copy that. And this one is going to give us a 3. And I don't need that. So basically, if yesterday's RSI value was less than 70, and today's RSI value is greater than 70, that is a third buy signal. We'll put a 3 in our column. So if I now run this, we've got a signal column created. We'll have a look at outputs in a second. So, and then normally we've got just long entries and short entries, but today we've got 2 long entries. So I'm going to copy this entire block here. So all this block does is define a function called long entries, which creates a column called long entries in our data frame. And all it's doing is looking for signal equals 1, which is a buy signal, and then returning the value of the low column. And we're going to add more long entries there, and that would be sell signal is 3. And also I'll create a different named column, and then there we go. So effectively same thing. So if the signal is 1 or 3, we get long entries or more long entries, and then if our signal is 2, we get short entries. So if I now let's see if we get any values here. If I now run all this, okay, good. So you can see, I'm just looking, there we go. So we got a buy signal here, which is indicated by a 3. And I don't know why that's so, looks like that. But anyway, so we got a buy signal indicated by a 3 in our signal column, and it returned the value of the low minus a small offset. So we're going to take these values here. This is what tells Plotly where to put our markers effectively. So I'll get rid of that for the time being, and you can see that in terms of our signal, our value counts on our signal column, our 3 was the most popular. So we go, we're sort of below 70 and above 70 the most, so 136 times. We had 101 standard buy signals where the moving averages are in bullish position and RSI moves above 50, and then we don't really get a lot of sell signals. So I think it kind of teaches you a bit about price, which is that when price is falling, it happens quickly. RSI just remains oversold and never really gets into any kind of overbought position, including going back above 50. When it's in bullish position, we don't always dip back below 50, but we do see a lot of pushes above 70. So that's going to be probably going to be our main one. So, all right, let's go and display these on a chart then. So let's go and have a look at our signals. So we're going to take this and we are going to add it into our chart settings. I'm probably going to add one for more long entries as well. Okay, and I'll change the color. What should we have the color? Let's have it light blue. Is there a light blue? I don't know, but anyway, we'll find out. So there we go. So you can see our sell signals don't get a lot of them, even in the, see what I mean about the downtrend. So when the price trends down quite fast, we just stay oversold. So you never really get an overbought RSI in order to get short. And yeah, when we had this little pullback here over a week or two, we did get back above 50, but we never ever got into that overbought position. So we never got a buy signal like this, which is one that's generated when we move above 70 on RSI. So anyway, we've got enough signals, and we can see that we are getting sell signals down during downtrends effectively. We've got one there, haven't we? Let's have a look at that one. Oh, so moving averages, when price goes flat, the moving average, like here, the moving averages can go can sort of chop and change basically. But on the whole, we're getting sell signals only when our sort of bullish trend has ended. So as we're sort of turning over here, we're starting to get sell signals. We're not getting them during runs like this, and we're not getting them during runs like this. Instead, we're just getting buy signals, which is pretty good. So, all right, let's go and get this then into a back test. So for that, I'm going to come into this section here and just grab the entire script. And let's plop this in here, and then we're going to amend it slightly. So this section here sells after a certain number of days. We don't need that. And then we're not going to trade on the close, and we're not going to hedge. So we're only going to have one position at any one time. That's that exclusive orders equals true. We're not using any leverage. We're starting with 100 grand. We're using the values in DF, and we are using this strategy which we've created here. So this basically just takes in the values of our signal column. This initializes it. Price is what we key off to set our stops and losses. So basically following a buy or sell signal, it takes the closing price on that signal, and then where signal equals 1, if we are short, we close it, or if we don't have a position open already, we buy with 99% of our available capital. If we get a sell signal, so signal equals 2, if we are already long, we close that position, or if we don't have a position already, then we would get short with 99% of available capital. And we're going to need a third one for our third sell signal. Actually, do you know what? I should copy that, shouldn't I? So we'll copy that, and we'll change that to an LF. And that is if our sell signal equals 3. All right, let's run it now. So this is raw, and don't forget this is you are holding a long position until you get a sell signal. So that's why our return is very low, and we're in the market massively too much, and our drawdowns kind of match what the Nasdaq gave you over the last 10 years. So we don't get very many trades either, and our win rate's low. So, and that is because what's happening here is following a buy signal, the only time you get out of the trade is when you get a corresponding sell signal. So it's holding it for all this time. This buy signal here, for example, you wouldn't have exited it until that sell signal came there, and then you would have been short here until that buy signal happened, and then long until that. Anyway, so in order to get around that, you need to set profit and loss targets. So I'll do these in order. So let's go and see whether our short side could make money. They don't always. So running it raw, you lose money, 43%. You're not in the market all that much. You get 16 trades with a win rate that is crazy, and your worst trade you lost 11%. So let's muck around with it and see whether you could actually get it to win. So first thing to do is set a profit target, and let's put that at 1%. So if we run that now, 1%, okay, we didn't lose as much. We're not in the market very much at all. 32 trades, so we massively increased that, and we actually have a good win rate. But our worst trade lost 15%, so that's the problem, isn't it? So the ones that go against you are the ones that don't go 1% lower following a sell signal, because you don't have a stop loss in place. They're the ones that kill you. So let's set a stop loss, and we'll make it quite loose, so to give it enough room to win. And it still loses. So, and we've played around with a fair amount of this, and basically I haven't managed to find a combination of stops and losses that would make the short side profitable at all. So we're just not going to do it. So instead we're going to have a look at our sell signal. So first one is our primary buy signal, which is the one where our moving averages are in bullish position, and we get a pullback taking RSI under 50 and then back above, which triggers along. So these are these white ones rather than these sort of light blue ones. I should make those colours different, shouldn't I, really? Let's go and have, what did I have light? Let's just change that to blue. There you go, that's a bit better, isn't it? Right, so the white ones are sell signal equals 1, and this is where you get a pullback and then a push up, and the blue ones are the ones where we're in a bullish trend and we push into an overbought position. So we'll do these ones first. So for this, we've already had a look at it. Best stop loss, or the best combination I found was a stop loss of 2% with a profit target of 6%. So 3 to 1 risk to reward, not bad, and it pays not brilliantly, but it is decent enough in terms of drawdown, so much less than the market gave you. In fact, your exposure time's massively reduced and you still made 186%, pretty good. Win rate, not so good. And but not too many trades either. You really do need the sell signal equals 3 for this. And for that one, we came up with just going for an absolute profit target. So with this one, you're basically going to hold it until it wins or you get a sell signal, which sounds a bit bad, but actually you only get this signal in strong bullish phases. So it does work out all right. So effectively, we made about half what the market would have given you. We're in the market about half the time, but we have a lower drawdown than the market would have given you, and we've got just about enough trades to be statistically relevant with a very high win rate. So, and yeah, you got clobbered probably on this one here with a 10% worse trade, but in fact, to tell you what, let's go and have a quick look and just see whether we can find a way to make that better. Right, let me remember what we had. So 282 and minus 10. Let's try that again. Yeah, so you lower the win rate. Yeah, your max drawdown comes down. Your worst trade comes down. You don't really affect your win rate too much. But you lose a little bit of return, and that's with an 8% stop on that bullish phase buy signal. Sell signal equals 3. So I'm just going to leave that as it is. And then if we go and have a look at our profit and loss graph, let's go and take this bit here, and we'll also do a Monte Carlo simulation. Let's go and grab these here. And then for both of these, I'm not going to save the image. So just do that. And then, so if we run this and have a look, see how did our strategy do? Was it as safe and reliable as we thought? Not, I mean, it did okay until we got to sort of around that 2021 time. And don't forget, QQQ was falling quite hard at this point, between 2021 and 2022. But we seem to top out sort of late 2021 and dipped into a year, but other than that, it's pretty much plain sailing. So not bad. And then in terms of our Monte Carlo simulation, that's quite good as well. I'd love to see this. Obviously, it just doesn't trade enough to for you to do it. I mean, it's 10 trades a year, but added to something else, added to a few more strategies, it would be pretty good. So this Monte Carlo simulation is based on the percent return that you get for each trade. So it takes in a list of all the 114 trades, randomizes the order of the return percentage that you get, and then creates 100 different P&L graphs and displays them here. So you can see that in your, and what it's meant to do is show you what would happen if all the losing trades came first, basically. So, and in this one you can see in your worst strategy you were down 23% before it started making profit. So in fact it took a while. It took your first sort of 28 odd trades, 26 trades in order before your profit, before your strategy got into profit. But either way, but you can add this one into something I think and do okay. Let's go and have a look at leverage. I wouldn't normally add it, I wouldn't use it personally, but I think you'll find if you use 2-to-1 leverage, you are going to massively increase your returns. Obviously, everything is going to look exactly the same apart from your drawdown. Obviously, that's amplified by the fact they're using 2-to-1 leverage, but still not bad. So, not bad at all. So, all right, that's it from me. Any questions, feel free to email info@bubble-analytics.com. Thanks now. Bye-bye.